Okay, in question 2 in this exam paper, it only counted 20 marks. They asked students to prepare your correct bank balance. So let's just scroll down to the bottom. You had to do the correct bank balance, which means they have not provided you with the bank balance you require for your bank reconciliation. They have also given you a hint to say that you have to calculate the bank balance as at 31st of May, which means that is your starting point. You start with your opening balance and then you do any adjustments that would go to your cash book receipts, cash book payments to get to the correct balance. Okay, and then question 2, they want you to do the bank reconciliation statement. Now, because of the fact that it's only 5 marks, it would not be a very long bank reconciliation. But you would see most of your marks are actually listed under your correct bank balance because you would have to do the adjustments that you would normally include in your cash book receipts, cash book payments to get to that balance. Now, there is a question in your textbooks, I think it was question 2.4 that was very similar to this. So if you need some extra practice, just go back to your textbook to see how they did that question. Okay, so let's start with what did you have to see? So the first thing you had to see based on the information is our year, or the end of the month is 30 June 2009. 10.1, they give you a bank reconciliation at 31st of May 2019, which is our previous month bank reconciliation. Now, what do we have to do with that? We generally use the bank account balance for our general ledger. Now, in this case, we will use it to work out the bank account at the end of June. And you will see they have given you a question mark, but they have given you all the other information. How a reconciliation works is we reconcile the bank statement balance to the bank account balance by showing the adjustments. But what they've done now is they have not indicated whether it's a positive or a negative in the scenario. So what you have to do is you have to go work out, is it a positive or a negative based on your knowledge. So let's quickly go through this information. So if they tell you it is an unfavorable balance, it means we owe the bank money. So that's why this balance should actually be a negative 25,400. Then outstanding deposits, that is amounts that still has to go through the bank account, so it would affect our bank account in a positive manner. So we add the 5,700. Then outstanding checks is money that we still have to pay out. So that would again then negatively impact our bank balance. Now the last one is the correction of the incorrect check. You will have to go down to note 2.5 to determine if it's a positive or a negative. So let's first start with 2.5 and then we'll come back. Okay, so under 2.5 they tell you the correction of the incorrect check for 570 refers to a check that was incorrectly debited twice. So they've debited it twice. So it means they have deducted it from our statement twice. Okay, so if they deduct it twice, we have to add back one entry. Okay, so that is why it's going to be a positive. Now, what you also had to see in here, the error has not been rectified by the bank. So it's not showing on the bank statement. So it means it remains a reconciling item. Okay, so it has not been fixed yet, so we carry it over. So that is why, yeah, at the top, I wrote next to it as well. It's a positive amount, so we're going to add it, and then we're taking it to the bank recon for June. So I'm showing it has not been fixed yet, but based on the information I've read. Okay, so that is the first step to work out your opening balance. So we're going to take the negative 25,400, we add the 5,700, we deduct the 1,430, we deduct the 2,780, and then we add the 570. Now, if you add all of that together, you should get to a negative amount of 23,340. Okay, so that is what the opening balance was based on the May information. Okay, so that is a portion of answering question 1. Now let's go through the rest of the information and see how we need to adjust it. So in this scenario, yes. Okay, sorry, we've just got a question here in class. So she said when she calculated the bank balance, she also considered point? Okay, so point 2.10. Okay, so Tamelo, we still need to do the rest of the adjustments. So this is just the beginning balance. This is not the rest of the adjustments for the month. So this is your starting point. Okay, and then we have to account for each and every adjustment, whether it's on your bank statement or bank account amount or on your bank recon. So as we go through it, I'll show you where each and every entry then affects what account. Okay. So this is just step 1. It's not, we haven't finished the question. We only done a portion of it. So once we're done, then let's see if I've answered your question. But it's a good question. Okay, so based on the information, they give you now additional information. So how I would suggest you approach this in the exam is you do both question 2.1 and 2.2 at the same time, because some of the information would affect both or would affect one or the other. Now, as you've read through the information, I want you to deal with it, tick it off, and then move on so that you don't have to flip back. Otherwise, you will not finish this question. Okay, so question 2.1, it tells you the provisional totals for the cash books on 30 June was cash book receipts 113,200 and your cash book payments 96,000. Now this we add to our bank account balance calculation. So normally in your general ledger account, your T account, you would take the opening balance, you would add the total receipts, you would deduct the total payments to get you your balance amount. So this is the balance before the following adjustments. So you would account for this in your calculations. I'm just going to quickly share the Excel file with you guys so that you guys can see what I am talking about. Okay, so step 1, we worked out what the balance is. Okay, so that was step 1. Now the second one we do is we add the provisional cash book totals. Now because we're only adding the net amount, you take the 113,200, which is your receipts, which would be the positive, and we deduct the 96,000, which is the payment, to get to the net movement that we need to add to our balance. If you don't like this method, you can show them separately as well as a positive and a negative. You do not have to show them as a net amount. We will accept either or. Okay, so that is the provisional cash balances. Okay, so let's share the PDF again so that we can go through the rest of the question. Okay, then question 2.2, the outstanding deposit at the end of May for 5,700 appeared on the bank statement on the 5th of June. So what you do is you create a tick here. Yes, it's been dealt with. You tick it on your previous bank reconciliation so you know that you do not have to carry it over to the following months. So you put a little tick mark there to show it has been cleared. Then number 3, check number 135 appeared on the bank statement on 7 June for 3,100. An investigation revealed that the bank statement was correct. Okay, so that means this amount here has actually been dealt with, but we need to correct the amount in our cash books because of the fact that we showed a lesser amount than what it was actually on the check. So that is why I did this calculation here. The 3,100 is the correct amount in our bank statement, but we only show 2,870 in our cash book payments. So we need to reflect an additional 320,000 in our cash book payments to show the correct amount for that check. Okay, and then once you've done that entry, you can tick it off. I'm just going to read the next one, and then we're going to deal with 2 or 3 entries at a time just to make it a little bit faster. Then 2.4, check 116 still did not appear on the bank statement for June. The check was initially written out to give for the needy as a donation on 20 November. Okay, if they give you a date like this, little flags need to go off that it is potentially stale. So if we've issued it in November, December, January, February, March, April, May, June, it's 7 months has already passed. A check is stale if it's older than 6 months. So we need to reverse that check and take it to the cash book receipt. So initially we would have shown it as a cash book payment, but to take it out, we do the opposite. So this check for 1,430 now actually goes to our cash book receipts. And okay, this was the cash book payments for an amount of 320. So let me just put the adjustments here at the top as well. Okay, so we're going to take it to the cash book receipts, and then that has also been dealt with. Okay, so you can see there's 2 entries that will affect our bank balance. The one will affect it negatively, the other one will affect it positively. And then once you've dealt with that, you put a little tick mark next to it. And then 2.5, the correction of the incorrect check. Now that we've already said that we had to add back the entry. It's shown on the bank reconciliation, but it has not been resolved. So we will carry it over to the bank reconciliation for this month. Okay, so let's do those 3 entries first, and then we'll move on to point 2.6. Okay, so I'm sharing the Excel again. Okay, so we see 2.3 was the difference. So our first adjustment goes the correction of the error, which is the 320, which we've deducted too little in our cash books. So it would affect our bank balance or bank account in our general ledger negatively. Then 2.4 is the stale check. Now we said for a stale check, you have to add it back to your cash book receipts because we're no longer going to pay it. So that is the 1,430 Rand. Okay, and that would positively affect our cash books. And then we say 2.5, that 570 has not been corrected as yet. So that would actually affect our bank reconciliation. So the first thing we would have to do is the balance per the bank statement. We have not read that information as yet. Correction of the incorrect check. So you automatically then go enter that 570 onto your bank reconciliation as you go through the information. Okay, let's share the format in what sense? Okay, so the question here in class is for the bank reconciliation, doesn't matter what format your adjustments are done in. No, it doesn't, as long as you have shown the adjustments and the description is correct. Okay. We also, some students started, for example, with the bank account balance and worked it to the bank statement balance, so the opposite way around. We also mark it that way because you are applying the principle correctly, even though you've done it in the opposite manner. Okay, so as long as you apply the concept correctly, you will get the marks. Okay. So that is how we deal with point 2.2 at 2.3, 2.4. And now we're going to move on to point 2.6. Can I help you?
Sorry, what's this?
Accounting. Are you looking for your exam?
No, I'm looking for revision class.
Okay. Okay, so 2.6, we've got two checks that the accountant has not dealt with. Okay, so what we have to look is you have to look at the information to assess whether it is something that will impact your cash books or not. Okay, so the first one they tell you is check 141 for 5,400 issued to Guildford Furniture. So that is a check that the business have written. Even though it is dated 15 July, it would already be accounted for in our cash books. Only the checks that we have written to keep track of all the checks that have gone out. So in this scenario, you would include it in both the cash book payments, so in your cash book, and in your bank recon as a deduction. And the only reason we will affect both is because it has not been entered as yet. So it hasn't been dealt with at all. Then the next one, CHH 101, was received from a debtor. So this is a check we've received from one of our customers for 3,200. You will see it is dated 25 July. So for our debtors, we can only record it in our cash books in the month that it is applicable. So in this scenario, we will only enter that check that we've received in July when we can technically go bank it. This is called a post-dated check. So the first one will affect our bank account, but the second one will not affect our bank account at all. Okay, so that one you need to leave out. Then 2.7 is the following checks appear on the cash book payments but not on the bank statement. So if it appears on the cash book payments but not on the bank statement, we take them to the bank reconciliation as outstanding checks, which will be deducted. Then 2.8, we've got the bank statement showed an electronic transfer into our account. So we've received money into our bank account from a debtor which we were not aware of. So we have not recorded it in our cash book receipt. So that 5,000 Rand is included in our cash book receipt, which would affect our bank balance. And then the bank statement shows the following charges. So this is expenses that the bank has charged us, which we still need to reflect in our cash book payments. So it's the bank charges, interest on overdraft, the dishonor check. But remember, for the dishonor check, it is only for the value the check was initially. The other portion would generally go through your general journal for the discounts allowed. Okay, so in this scenario, you would only show the 870 and not the 960. The 960 is there to confuse you. And then the debit order for insurance. If you write debit order, just write it's for insurance, or you can just write it's insurance for 3,600. Okay, so you need to be very specific with what the expense is for. Then 2.10. An investigation revealed that the bank has paid the insurance policy twice. The actual amount is 1,800. The mistake was also made last month. Okay, so what happened is in our books, we've accounted 4,800 in the cash book payments. However, the bank showed it as 3,600 last month, 3,600 this month. Now they should have only shown 1,100 last month, 1,100 this month. So how we correct the error, as you'll see, I've got 1,800 multiply with the 2 months that they've done it incorrectly. And because they've deducted too much from our bank statement, we need to add it back to get back to our bank account balance. Okay, but this we would show on the bank reconciliation because the error is on the bank side and not in the business books. So this will not affect your bank balance in our books. And then 2.11 is the cash book receipt showed an amount of 15,600 that does not appear on the bank statement. So that's outstanding deposits, which we add to the bank recon. And the last one is the bank statement showed an unfavorable balance of 19,980. If it's unfavorable, it is a negative balance. It means it's an overdraft facility. I've taken more money than what I had in the bank account. So in your bank reconciliation, you will start with a negative balance. Okay, so let's go back to the Excel file and let's go complete the question based on this information. Okay, so let's go question 2.6. We said the first one is check 141, which is the post-dated check, but we deducted from our bank balance because we reflect any checks our business have written already in our cash book payments, and we also have to show it in our bank reconciliation because it would not have gone through the bank as yet because it hasn't been dealt with. Then check CH8101, just to recap, we do nothing with it. You don't show it anywhere. Then the following checks appear on the cash book payments but not on the bank statement. So those are two checks which is also outstanding. You also show them on your bank reconciliation for the 1,200 and the 680. Then the electronic bank transfer into our account from our debtor, that would affect our bank account balance in a positive manner. So you say the electronic transfer, you can put in here V price for 5,000 Rand. Okay. Then 2.9 is all the charges which has gone through the bank statement but has not been shown on our cash book payments. So you do the bank charges, your interest on your overdraft, your dishonored check. Now remember, dishonored checks goes to debtors control. So you could also have written the debtors control and then your debit order, and you need to indicate it is for insurance. Okay. Then 2.10 is the error that the bank has made. That would be on your bank reconciliation. And it would be, I'm just going to type in here, it's the 1,800 times 2, because that error was made for 2 months to give you the 3,600. And that would positively affect your bank reconciliation. Then 2.11 is the outstanding deposits that you need to show on your bank reconciliation of 15,600. And they told us the bank statement balance is unfavorable for 19,980. Okay, now based on that, we have, oh, sorry, the insurance paid. Okay, you were correct, Tomato. We have to impact, okay, so because of the fact that the insurance, was a debit order, we would have captured what the bank said the amount is. So in our cash book payments, we also would have to correct it to reflect the correct amount. So we would also add back the 3,600 on the cash book payments. No, cash book receipts, because it would have corrected the cash book payments. So we will show it there as well because it was a debit order. If it was a check, then we would only have reflected it on the one side. Okay, then once we've done all of these transactions, then we go add up to get the balance per the bank account as of 30 June. Now you will see based on adding all of this information up, so you take the opening balance and all the movements, you get a negative 7,490. Now this balance here should be exactly the same as the balance per our bank reconciliation. Now let's see if we add the amounts up on the bank reconciliation. What do we get? We get 7,490. And because those two are exactly the same, we know we have done the transactions correctly. So we have reflected them as a positive or negative in the correct manner, and we've disclosed them on the correct account to get to the same value. Okay, so this is how you would have to do question 2. Do you guys have any questions before we take a 10-minute break? The guys online, do you have any questions on the bank reconciliation?